Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hansoh Pharmaceutical Group Company Limited Annual Report. Hansoh Pharmaceutical Group Company Limited is a leading pharmaceutical company based in Shanghai, China. The company engages in the research, development, production, and sale of various pharmaceutical products for different therapeutic areas. The company's product portfolio includes a wide range of medications for treating various diseases such as anti-infection, central nervous system disorders, oncology, metabolic diseases, autoimmune diseases, and others. Some of its principal products include Amil, Hansoh Zinfu, Pulil, Zephay, Zintai, Zinmei, Gainuo, Teneng, and Pulatin. In addition to its own product development, Hansoh Pharmaceutical has entered into license agreements with several international companies. These partnerships enable the company to develop and commercialize innovative products such as H-20089 and H-20093 for treating extensive-stage small cell lung cancer, a bispecific antibody-drug conjugate product, and an investigational oral small molecule glucagon-like peptide-1, GLP-1 receptor agonist. The company's partnerships with GlaxoSmithKline Intellectual Property, No4 Limited, Biotheus Inc., and Merck Sharp and Dohme LLC, MSD, demonstrate its commitment to innovation and collaboration in the pharmaceutical industry. With a strong presence in China and a growing global reach, Hansoh Pharmaceutical Group Company Limited is well-positioned to continue making significant contributions to the development of new treatments for various diseases. The company's services include research and development, production, and sales of pharmaceutical products. Its business areas include research and development production and manufacturing sales and marketing licensing and partnerships. Its main businesses include pharmaceutical products, biotechnology, medical devices. Hansoh Pharmaceutical Group Company Limited market capitalization of $197 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Hansoh Pharmaceutical Group Company Limited holds a significant advantage in their industry. Hansoh Pharmaceutical Group Company Limited trades at a higher price-to-earnings ratio of 36 times and a higher price-to-book ratio of 5.59 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 9% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth and decline are multifaceted and influenced by various factors. On the growth side, innovative medicines have been a significant contributor, with notable increases in sales mentioned on pages 2, 6, 18, and 19. The approval of new indications for Amil has also boosted revenue, as seen on page 7. Additionally, exclusive license agreements, such as the one with Glenmark, have contributed to growth. Furthermore, upfront payments from collaborators like MSD and Regeneron have provided a substantial boost, with figures reaching up to $2.01 billion. On the other hand, revenue decline is limited to investment income, which saw a significant drop of 66.1% between 2024 and 2025, as mentioned on page 29. This decline in investment income stands out as the sole driver of revenue decline in the provided summary. Overall, the growth drivers are more prominent and widespread, indicating that innovative medicines and strategic partnerships have been key to driving revenue expansion. The company's financial performance indicates a strong ability to generate positive operating cash flow. According to the annual report, operating activities generated a net cash inflow of RMB 6,738 million for the year ended December 31, 2025. This is further supported by an increase in cash and bank balances from RMB 9,519,915 in 2024 to RMB 8,927,102 in 2025, demonstrating a positive operating cash flow. The company's financial position also shows that it has net proceeds of approximately $436 million, which can be utilized for working capital and other general corporate purposes. Additionally, the remaining unutilized funds amounting to $34.60852 million further indicate the company's ability to manage its finances effectively. Overall, these indicators confirm that the company is generating positive operating cash flow, a crucial aspect of its financial health. Management is optimistic about the company's future prospects, outlining a pragmatic approach to accelerate near-term commercialization and growth. This strategy involves entering into strategic collaboration projects through licensing agreements, which will enable the company to leverage external expertise and resources. In addition to collaborations, management plans to invest heavily in research and development, R&D centers, production lines, and upgrading existing facilities. This investment is expected to drive innovation and improve operational efficiency, ultimately contributing to the company's growth trajectory. The company also envisions a long-term vision of establishing an integrated global platform for innovative medicine R&D technologies. This ambitious goal will enable the company to stay at the forefront of technological advancements and maintain its competitive edge in the industry. Overall, management is confident that this multifaceted approach will drive commercialization and growth, both in the near term and beyond 2027. The company's commitment to innovation, collaboration, and investment in R&D capabilities positions it for sustained success in the years to come. The company's financial activities have been transparent in their annual reports. One notable aspect is the payment of dividends to shareholders. As per the records, the company has declared and paid out significant dividend amounts for both 2025 and 2024. This indicates a commitment to rewarding investors through cash distributions. However, there is no mention or indication of share buybacks in the provided information. The focus remains on dividend payments, suggesting that the company's primary strategy is to distribute profits directly to shareholders rather than repurchasing shares. That concludes the financial summary for Hansoh Pharmaceutical Group Company Limited. Feel free to comment below, and I will be happy to answer them when possible.